As of May the 28th, which is today at the time of recording, Riot Platforms has just announced that they're proposing to acquire Bitfarms for $2.30, that's US dollars, per share, in what would create one of the largest Bitcoin miners. Now, as someone who holds a decent sized position in Riot, let's dissect this because it's come as a little bit of a left field option for me. So I'm going to break this down broadly into what I see as the good, the bad, and the ugly with the deal. Starting with the good, this would give Riot an immediate and much needed boost in its Bitcoin operations. So Riot has been pretty stuck compared to many of its peers with infrastructure works being done, but that hasn't realized into extra exahash yet. So an acquisition of Bitfarms would immediately increase Riot's operational hash rate by 70% compared to April's numbers, which would help it close the gap to CleanSpark and Marathon, which have really pulled away from Riot over the last 12 months. Bitfarms also have some of the most aggressive expansion plans in terms of percentage increase in exahash, with a lot of that expansion due to happen in Paraguay. Now, if all of the growth projected by the end of the year was achieved by all of the Bitcoin miners, based on my chart here, then it would make the expanded Riot the biggest miner by operational exahash by the end of 2024, assuming all of the exahash expansion becomes operational. Now, Bitfarms also have significant operations outside the US, which would help Riot diversify. So one of the negative things that I see about Riot is that all of their current exahash is based in Texas. Now, that has some benefits in terms of the facilities are relatively close by to each other. You can ship people backwards and forwards between them, but it comes with some obvious downsides as well. So, for example, there's regulatory and political downsides, and perhaps more on a weather point of view, there's hurricane risks in Texas, and that could damage facilities and knock out, especially with Riot having large local facilities rather than lots of smaller facilities. If it knocked out one of the, say, the Corsicana facility or the Rockdale facility, that'd be a really big blow for Riot. And so by acquiring Bitfarms, it would eliminate some of that risk by expanding the geographic location of Riot as a company. And so just quickly touching on the bad as well, Bitfarms faces a lot of uncertainty itself with its planned expansion, especially in Paraguay. Now, if you've been following this story, you'll know that Paraguay has had a flip-flopping relationship with Bitcoin miners for quite a few years now, teetering between banning them, not banning them. And Paraguay has its own benefits in that there's potentially very cheap power costs in Paraguay. And that seems to fit into Riot's ethos of trying to get really low power costs with its demand response systems in Texas. It wouldn't necessarily need that so much in Paraguay just because of the price of the power anyway. But the fact that most of the expansion is due from Bitfarms in Paraguay, it creates a lot of uncertainty around whether those future goals that Bitfarms is aiming for can be achieved. Now, I personally think that there's a lot of benefits to having Bitcoin miners on a power grid. They can help to a lot of demand response and stabilization during peak times and low times. So I personally would expect Paraguay to continue to allow expansion of Bitcoin miners. But when there's just that uncertainty, it does make me question slightly whether paying a premium for the company is really worth it. Now, I'd also say that bad is maybe a little bit of a strong word for this, but the fleet efficiency of Bitfarms and Riot aren't really at the bleeding edge of the industry. A number of their competitors are heading sub 20 joules a terahash in the near future, which neither Bitfarms or Riot are even getting that close to. Now, the reason I don't see that it's too much of an issue, but I've still put it in the bad category, is that Riot's going to be acquiring a lot of old equipment when it buys Bitfarms. And obviously that equipment's going to have a shelf life, and Riot's going to need to replace that equipment in the coming years. Now, perhaps the main thing I see is the ugly is the lack of synergy between the businesses. So there's very little efficiency to be gained here by Riot, and that's because most of Bitfarms' facilities are in different countries, so the staff will broadly have to stay as separate businesses. It will just be almost more of a merger rather than an acquisition in a way. I also personally don't see that many mergers and acquisitions that really pan out in a really stellar, beneficial way. Now, obviously, there are some examples when it works out, but there's many, many more examples where I don't see it as that much of a benefit for the shareholders. And considering there isn't that much synergy, when we look at some of the market prices per exahash currently and into the future for these companies, you potentially think that Riot could have got a better deal elsewhere. If they'd acquired some different companies, they might have been able to pick up that exahash cheaper if that's the core reason behind the expansion. Now, this is still a fairly unfolding news story. It sounds like Riot have approached Bitfarms previously about this, and it's been batted back, and so Riot have gone public with this announcement. So I'm sure we'll see a lot more details start to come out in the coming weeks and months, and whether it will happen or not, I'm not really sure. I'd love to hear your thoughts because I'm still a little bit torn as a shareholder with Riot. because I don't necessarily see a huge amount of extra value. But yeah, leave your comments below. I'd love to hear what you think. And thanks very much for watching, and I'll see you soon.